Assalamualaikum warahmatullahi wabarakatuh and good morning to everyone. Today, I will be presenting our report entitled Zakat in Islamic Accounting, which is Principles, Practices and Contemporary Challenges in Financial Reporting. As we know, Zakat is one of the 5 pillars of Islam and plays an important role in wealth distribution, poverty reduction and social justice. In today's business environment, Zakat is no longer limited to individuals. It is also applied by corporations, Islamic banks and other Islamic financial institutions. With the rapid growth of Islamic finance around the world, proper zakat accounting and reporting have become increasingly important. This is because Islamic institutions must not only achieve financial performance but also fulfill their religious and social responsibility. In this presentation, I will discuss how zakat is managed in Malaysia, the zakat accounting principle behind zakat, how zakat is reported in financial statement, the role of international and national regulation, as well as the challenges faced in harmonizing zakat accounting practices. Let's begin by looking at the background of zakat institution in Malaysia. Malaysia is often recognized as one of the leading countries in zakat administration because it has a well-structured governance system. Unlike many countries where zakat is managed by the central government, zakat administration in Malaysia is placed under the authority of each state. Responsibility is carried out by the State Islamic Religious Council. Because there are 14 different state administrations, differences may exist in calculation method and distribution practice. To improve coordination, the Department of Waqaf, Zakat and Hajj was established in 2004. This department acts as coordinator by promoting best practice and ensuring that zakat contributes effectively to the socio-economic development of the Muslim community. After understanding the government structure, let us see how zakat management has evolved over time. One major development in Malaysia's zakat system was the privatisation of zakat collecting during the 1990s. The purpose of improvement efficiency and strengthen public confidence in zakat institution. Example include Pusat Pungutan Zakat and Lembaga Zakat Selangor, which introduced professional management practices, digital payment system and online services. As a result, zakat collection has increased significantly over the years. This also shows that modern management approaches can improve both efficiency and public trust. However, collecting zakat is only one of the process. Equally important is how the funds are distributed to those who are eligible. Now that we've looked at how zakat is collected and managed, let's talk about where the zakat money goes. In Islam, zakat cannot be distributed to just anyone. The Quran specifically identifies 8 categories of eligible recipients known as asnaf. They include the poor, the needy, zakat administrators, new converters to Islam, people in debt, travelers in need, and those striving in the cause of Allah. This system ensures that zakat reaches those who genuinely need assistance. Because of this structured distribution process, zakat serves not only as a religious obligation but also as an important tool to poverty alleviation and social welfare. When zakat is distributed effectively, it creates positive impacts of society. Firstly, it helps reduce poverty by providing financial support to vulnerable groups. Secondly, it improves the quality of life of recipients by helping them meet their basic needs. Thirdly, it promotes social justice by ensuring that wealth is shared more fairly within a society. Therefore, zakat is not a simple financial contribution. It is a mechanism that helps strengthen the welfare and stability of the Muslim community. To better understand Malaysia's approach, we can compare it with other Muslim majority countries. Malaysia adopts a state-based system where each state manages its own zakat affairs. Indonesia uses a hybrid model that combines government institutions and private zakat organizations. Meanwhile, Saudi Arabia follows a highly centralized system where zakat administration is managed directly by the government. Although Malaysia experiences some variation between states, it is considered one of the most organized and effective zakat administration models in the Muslim world because it all combines government oversight with professional management practices. After understanding the institution background, we can now move to the accounting principle behind zakat. Unlike conventional accounting, which mainly focuses on profit and shareholder wealth, Islamic accounting is guided by Sharia principles. There are several important principles that form the foundation of zakat accounting. This includes stewardship, transparency, accountability, the principle of growth, and fair asset valuation. Together, these principles ensure that zakat calculations are accurate, transparent, and aligned with the Islamic value. Let me briefly explain some of these principles. The first principle is stewardship, or amanah. In Islam, is considered trust of Allah. Therefore, individuals or organizations are responsible for managing it properly. The second principle is transparency and full disclosure. Islamic institutions must clearly report their zakat obligation, asset, and payment to maintain stakeholder confidence. The third principle is the principle of growth, which means zakat is only imposed on assets that have the potential to generate wealth, such as cash, investment, inventories, and receivables. However, not all assets automatically become subject to zakat. Several conditions must first be satisfied. The asset must be fully owned, exceed the nisab threshold, and be held for more than a year, which is known as hold. In addition, eligible liabilities can be deducted before determining the final zakat amount. This condition ensures that zakat is imposed fairly and only on those who possess sufficient wealth.
Now, let us examine how zakat is reported in financial statements of Islamic institution. So, when the institution is responsible for paying zakat, the amount is recognized as an expense in the statements of profit or loss. If the zakat has been calculated but not yet paid, it is recognized as liability in the statements of financial position. So, this accounting treatment ensures that zakat obligations are properly recorded and disclosed. So, in some situations, Islamic financial institutions do not directly pay zakat on behalf of the company. Instead, they may act as an agent for the shareholder or investment account holder. In such cases, zakat may be deducted from distributable profits, and institutions are required to disclose how the zakat was collected and distributed. So, this disclosure enhances transparency and demonstrates compliance with Sharia requirement. Now, let's take a look at what the differences between zakat and taxation. So, although zakat and taxation both involve compulsory payments, they are fundamentally different. So, zakat is religious obligation aimed at wealth purifications and social welfare. Taxation, on the other hand, is imposed by the government to finance public expenditure. So, another key difference is the calculation base. Zakat is generally based on wealth and zakatable asset, while taxation is usually based on income or profits. Therefore, while both involve financial contributions, their objective and principle are quite different. Now, let's move to tax rebate systems in Malaysia. So, Malaysia has introduced a tax rebate system to encourage zakat payments. So, for individual, every ringgit paid as zakat can reduce income tax payable by the same amounts. For example, like 1 ringgit equal to 1 ringgit. And then for companies, zakat payments may be deducted from the business income up to certain limit. So this approach helps prevent double financial burden and encourage Muslims to fulfill both their religious and legal obligations. Now, we move to the role of IOF standards and national zakat regulation in Malaysia. So, to ensure consistency in zakat reporting, Islamic financial institutions rely on international standards. One of the most important organizations is the Accounting and Auditing Organizations for Islamic Financial Institutions, commonly known as IOF. So, IOF provide guidelines on how zakat should be calculated, recognized, and disclosed. So, its standard helps to improve comparability, transparency, and consistency among Islamic financial institutions around the world. So, for national zakat regulation in Malaysia, zakat accounting is also supported by national regulations. So, the Malaysia Accounting Standard Board provide guidance through Technical Release I1 on business zakat accounting. So, Bank Negara Malaysia (BNM) require Islamic financial institution to disclose their zakat policy and practices. At the same time, the Department of Wakaf, Zakat and Haji Jauhar promotes best practices and coordinations among zakat institutions. So this together, this body helps strengthen governance and reporting quality. Then we move to the harmonization challenges. So despite this existence of both international and national standard, harmonization remains a challenge. So different countries often adopt different calculation method, reporting practices and religious interpretations. For example, IOFIC recommend a zakat rate of 2.5775% when using the solar calendar, while Malaysia commonly applies a rate at 2.5%. So another challenge is aligning zakat accounting with international financial reporting standard, which were originally designed for conventional financial reporting. Although these challenges remain, greater harmonizations will improve transparency, consistency, and stakeholder confidence in Islamic finance.
Assalamualaikum warahmatullahi wabarakatuh. My name is SOFEA BINTI AZMI. So next, I will discuss the valuation challenges of zakatable assets. One of the major issues in zakat accounting is that there is no universally accepted valuation method. As a result, different scholars and institutions may apply different approaches, leading to variation in zakat calculations. The first challenge involves cash and cash equivalent. While cash is generally easy to value, problems arise when funds are held in foreign currencies. Exchange rate fluctuation and different valuation dates can affect the amount of zakat payable. The second challenge is inventory. Under Islamic principles, inventory is usually valued at its current market value rather than historical cost. When market prices fluctuate, determining a fair value becomes difficult and may lead to inconsistent zakat assessment. The third challenge relates to investments such as shares and sukuk. There are different scholarly opinions on whether zakat should be calculated based only on the income generated or on the full market value of the investment. This often results in different practices among organizations. The next challenge concerns receivable, particularly doubtful debt. Since there is uncertainty about whether this debt can be collected, scholars differ on whether they should be included as zakatable assets. This directly affects the total zakat amount calculated. Another issue is liabilities. Different approaches exist regarding the deduction of liabilities before zakat calculations. Some scholars allow current liabilities to be deducted, while others limit the amount that can be deducted. Consequently, organizations with similar financial positions may report different zakat obligations. Overall, these valuation challenges can lead to difference in zakat calculations, reduce consistency in reporting, and create compliance challenges for Islamic financial institutions. Therefore, establishing clearer and more standardized guidelines remains important for improving zakat accounting practices. Now, I will explain the key differences between individual zakat and corporate zakat. First, in terms of scope of assets, individual zakat applies to personal assets such as cash, gold, and investment. In contrast, corporate zakat covers a wide range of business assets, including inventory, receivable, business cash, and also working capital. Second, the calculation method differs. Individual zakat is usually calculated based on a person's net wealth after deducting eligible liabilities, making it relatively straightforward. Corporate zakat, however, use accounting methods such as the net asset methods or working capital method, which are more complex. Third, regarding accounting records, individuals are not required to maintain formal financial statements for zakat purposes. Companies, on the other hand, must keep detailed accounting records and financial statements to accurately determine their zakat obligations. The fourth difference is reporting and disclosure. Individual zakat payments are generally private and are not publicly reported. Corporate zakat is often disclosed in financial statements, including information on the calculations basis and the amount paid. Fifth, in terms of regulatory oversight, individual zakat mainly depends on personal responsibility and voluntary compliance. Corporate zakat is subject to monitoring by Islamic religious authorities and also regulatory bodies, especially for Islamic financial institutions. Finally, regarding tax treatment, both individuals and companies may receive tax benefits for zakat payments. However, companies are often eligible for tax rebates or deductions under applicable regulations. In summary, while both individual and corporate zakat are based on the same Islamic obligation, corporate zakat is generally more complex due to the wider range of assets involved, stricter reporting requirements, and also greater regulatory oversight.
My name is Liyana binti Ahmad. I will cover the part of case study of zakat implementation in bank or Islamic business. Before we start, let me explain the condition determine the responsibility for zakat payment. First is full ownership. The business asset must be fully owned and controlled by the owner or the company. Second is nisab. The value of zakatable business asset must reach the minimum nisab. Nisab is usually based on the value of 85 gram of gold or 595 gram of silver. Third is hold. Wealth is only subjected to zakat when held for 1 year or 1 lunar year. And finally is productive asset. The asset must be used for business and profit generating activity. On this slide, we compare Bank Islam Malaysia Berhad BIMB and RHB Islamic Bank in 5 key aspects related to zakat. First is background. BIMB is Malaysia's first Islamic bank, established in 1983, offering Sharia-compliant financial product and service. Meanwhile, RHB Islamic Bank, established in 2005, is the Islamic banking arm of RHB Banking Group, providing Sharia-compliant service and product in Malaysia. Second is zakat calculation method. BIMB used the capital growth method, whereas RHB Islamic Bank applied the working capital method. The third is disclosure. BIMB report zakat detail in its annual financial report under CSR section and in the Sharia Supervisory Council report. RHB Islamic Bank disclose zakat in its statutory financial statement, cash flow statement, and notes to the financial statement. Fourth is payment channel. BIMB pays zakat through state authorities such as Lembaga Zakat Selangor and PPZ Mawib. Meanwhile, RHB Islamic Bank work with PPZ Mawib through its social harmony incentive. And finally is distribution method. BIMB distribute zakat through State Islamic Religious Council and may act as a wakil to distribute zakat directly to eligible beneficiaries. Meanwhile, RHB Islamic Bank supports zakat distribution through zakat wakalah, ensuring fund reach eligible asnaf. Now let's move to the analysis of zakat pay. In 2024, BIMB paid 11.4 million in zakat, while RHB Islamic Bank paid 10 million. By 2025, BIMB increased its zakat to 13.93 million and RHB Islamic Bank to 12 million. This shows that both banks increased their zakat contribution over the 2 years, with BIMB paying a higher amount and growing slightly faster. Next, impact of zakat disclosure. Zakat disclosure is an important practice in Islamic institutions because it provides clear information about how zakat funds are managed and distributed. One of its main impact is improving accountability. When organizations disclose their zakat activities, stakeholders can understand better how the funds are used, which encourages greater confidence in the institution. In addition, zakat disclosure strengthens corporate governance. It shows that zakat management follows Sharia principle and is properly monitored, helping to ensure transparency and reduce the risk of fund misuse. Zakat disclosure also help build customer trust. When customers see that zakat funds are managed responsibly, they feel more confident in the institution and are more likely to remain loyal. Lastly, it enhances the organization reputation. By openly sharing their zakat contribution, Islamic institutions demonstrate their commitment to social responsibility, and supporting those in need, creating a positive public image.
So, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad HAKIMI bin ABDUL. So today I will explain about the challenges in harmonizing zakat accounting with IFRS. So the first one is, for the first challenges is different objectives. So IFRS focuses on financial reporting and profit measurement, while zakat accounting focuses on fulfilling religious and obligations. So next, I will explain about the different measurement methods. So IFRS use fair values and actuarial accounting, where zakat calculation follow Sharia principle and creating calculation differences. So next challenges is lack of standardization. So different countries and institutions use different zakat calculation and reporting methods for reducing comparability. So the next challenges is regulatory differences. So zakat regulation vary across jurisdictions, making compliance difficult for multinational organizations. So the last challenges is limited expertise. For there is a shortage of professionals with knowledge of both IFRS and Islamic accounting standards. Okay, next is conclusion. So zakat plays an important role in Islamic accounting by promoting transparency, accountability and social justice. Although Islamic financial institutions have established system for zakat reporting, challenge remain in asset valuation, calculation methods and harmonization with IFRS. Therefore, greater standardization, stronger regulatory coordination and improved professional expertise are needed to enhance zakat accounting practice. So effective zakat reporting can strengthen stakeholder confidence and support the sustainable growth of Islamic finance. So that's all from us. Thank you.